everyone, I'm Kathy Lean, and in today's video, I'm extremely excited to share with you some tips on how to use sentiment to trade Forex. In my experience, when it comes to trading Forex, there's nothing more important than sentiment. Sentiment is the way people feel. Sentiment determines the direction of the day. For day traders, it is especially important to be aligned with market sentiment. But for swing traders, sentiment is important as well because weak economic data may be ignored in a rising market and have a greater impact in a falling market. When market sentiment turns south, investors head for the exit quickly and in droves, typically leading to bigger sell-offs when panic spreads. But when sentiment is positive and investors are buying, the rallies tend to be slower and more leisurely and more orderly. That's why we've seen more 1,000-point declines in the Dow Jones Industrial Averages than rallies. Market sentiment is one of three important confirmation indicators that I look for in every trade. The first is fundamentals, the second is ZIP, my technical structure, and the third is market sentiment. I trade twice a day, at the early New York Open and shortly after the Asia Open. Before I put on my trade, I always look at market sentiment through three different lenses. Risk on, risk off, which currency is the strongest and which is the weakest, and how bond traders and commodity traders are feeling. Risk on, risk off can be measured in a number of different ways, but I like looking at stock futures and the VIX. Strong versus weak is easy to tell. All you have to do is look at the percentage change. This is more valuable for New York Open trades than Asia. But in Asia, certain pairs don't move so much. So if others are moving, there could be some good opportunities in currency cross plays. Bonds and commodities give us a guide on how investors feel about the US and Canadian dollars. We all know that on many days, the market's appetite for US dollars drive currency flows and nothing else matters. With all this in mind, how do I use sentiment to trade Forex? First off, risk on, risk off determines whether I buy or sell the Japanese yen and Swiss franc pairs. If stock futures are down a lot or VIX is very high, I'll be looking to buy safe haven currencies like the yen, Swiss franc, and even the US dollar versus euro, the British pound, and the commodity currencies. If futures are up a lot, I'll be looking to sell the yen, the Swiss franc, and the US dollar. Some of my best trades are in currency crosses, and there's so many ways to use relative change and pairing strong versus weak to trade. For example, in Asia, we don't typically get much movement in the Swiss franc or the Canadian dollars. So if the market is very bearish, the Australian or New Zealand dollars at the start of the session, some of the biggest movers could be the Australian dollar against the Swiss franc or the New Zealand dollar against the Canadian dollar pairs. In the New York session, how currencies are trading before the New York Open generally has continuation in the first few hours of trade. Now, number three, bonds and commodities are also valuable leading indicators for currency movements for the New York Open. For example, if I see Treasury yields up sharply in early New York and euro is holding strong against the US dollar, if there's nothing else going on to support the gains in the euro and stock futures are down, I'll be betting on decline in the euro dollar in the New York session. That's actually what happened when we saw those moves on Thursday. I hope you found this video useful. I use fundamentals, technicals, and sentiment to trade every day. And if you want to trade with me or learn more, please visit bkforex.com.